What's up, everybody? I'm back for another video. If you guys remember, a couple days ago, I posted a video about the Bitcoin crash, right? Crash, quote unquote. We are now sitting at around $45,000 a coin, and a lot of people seem to be freaking out. But I just want to put something into perspective. I want you guys to look at the bigger picture, zoom out, and remember that we closed January 31st of 2021, last month, we closed at $33,000. So we're still up roughly almost 40 to 50% for the month alone. So a lot of people are freaking out, they're panicking, they're scared. You guys are getting too caught up with the all-time high number, which is the $57,000, and you're just thinking, oh man, we were at 57 and now we're back at 45. You got to understand, guys, nothing go up in a straight line, nothing, okay? Everything that goes up has to come down. It's kind of like a marathon runner. You can't ask somebody to run, a 30-mile run and then expect them to run another 30 miles right after that. You got to give them time to catch their breath, give them time to sit back, relax, and refuel in order for them to continue running for another 30, 50, 100 miles, right? So the same thing goes with Bitcoin. Nothing goes up in a straight line, guys. I just want to point out something that I found today as well. It's the RSI indicator, which is the relative strength index. This just shows the momentum of the price action to see if something is being overbought or oversold. And that's basically usually how I look at it. Now, if you look at the weekly RSI, Bitcoin has been in overbought territory. Overbought is anything in this white area here. The purple box is the neutral area. So anything above that is overbought. Anything below that is oversold. When it's overbought, that just means that, it's time for a pullback usually. Of course, it's never an accurate indicator as far as it being 100% correct all the time. So don't try to trade using this indicator alone. I know a lot of people that try to base their whole trading system on this indicator alone, and I don't know. In my opinion, it's not that reliable, but it does give us a strong signal as far as, knowing when it might pull back. We don't know exactly if it's going to pull back right as it hits overbought area. Like as you can see here, we were in overbought for a long time before we finally pull back. So if you were to try to short Bitcoin right here, right as it approached the overbought area, you would be wrecked. You would lose a lot of money. You would get, liquidated. It's not something that you want to use as a main indicator. But I do every now and then look at it, especially on a higher time frame. This is the weekly time frame, for example. We have been in overbought territory, guys, ever since October of 2020. So about 4 months now, 5 months, we've been in overbought territory, and we never once retraced back into neutral territory until now. As you can see, we are now finally starting to dip our toe back into the purple box, which is the neutral territory. Now, that's a great thing, okay? And you guys don't know, like I said before in the beginning of the video, nothing goes up in a straight line, and the more pullbacks that we get, these are called healthy pullbacks. As we pull back, we have more momentum, more fuel to go for the next leg up, and that's what we need right now. We just been running on steam pretty much, right? We're out of gas, so they had to stop. We had to stop and get our composure in order to go for the next leg up, right? If you look in the 2017 bull run, as you can see from here, after the halving, which is this vertical line right here, we went into overbought territory. We bounced back into the neutral territory. We made another leg up, went back in overbought, came back down, made another leg up, came back down into neutral territory, and it happened at least 2, 4, 6 times in the previous bull run. And now here we are. We haven't even made it back one time yet. This is our first time dipping our toe back into neutral territory, as opposed to this previous bull run where we went 1, 2, 3, 4, 5, 6 times back into the neutral territory before we hit the top of the cycle. So that's how we know that we are very early in the cycle and that we have a lot more room to run for Bitcoin. And also that's how we know that we are way ahead of schedule, guys. If you watch my previous video, you know that the stock to flow model is supposed to be at $36,000 right now. So us being at 45,000, we're way ahead of schedule. We're moving very fast compared to the previous cycle, mainly because of the huge institutional demand that's happening in the past few months with Bitcoin, with Tesla, MicroStrategy, Square, PayPal, all these guys trying to buy a lot of Bitcoin, and the supply is getting cut in half because of the halving, all that good stuff. That's the reason why we're moving so fast. But with that being said, we also got to come back to reality and realize that, man, nothing goes up forever in a straight line. You got to give Bitcoin its pullback, because every single bull market that we've been through, this is what happened. This is the 2017 bull market. I use this picture a lot just to remind you guys that we got 38% pullback, 38%, 33, 38, 36, 29% pullbacks in the middle of a bull run. And then we pull back, and then we continue to make a little leg higher. And, we repeat, rinse and repeat, rinse and repeat. And so far, we only had two pullbacks for this bull run. One was only 33%, and this one that we're in right now so far is only about 27%. And it hasn't even been that deep of a pullback, and it doesn't last nowhere near as long as the previous cycle. And that just goes to show more into the strength of the demand from the institutional side, which is, in my opinion, what's causing these dips to get bought up so quickly. So, like I said, guys, this is the first time we're finally getting back into neutral territory since October 2020. And to me, that's a great thing. We need to make our way back here so that we can kind of, refuel and kind of consolidate a little bit before we make our next leg up. And it's gonna be a really good pump the next time that we finally make our next move before we pull back again. If you look at this chart here, Bitcoin rise an average of 150% after every 30% dips. So this is back in 2017. As you can see, the previous bull run where Bitcoin retraced, like I said, 38%, 38%, 33%, 38%, 36%, 29%. And each time we dumped, we always recover at least to an average of 150%. Now that's a range between 106 all the way to 238%. And the highest rise is always tend to be the last pump before the bear market, right? That's the mania phase. So you guys, if we if you look at the previous pattern, we dropped to about 30,000 approximately, and then we pump all the way up to 57,000. So that's almost 100% pump right there. And then we pull back. So if this was to repeat itself again, or let's just say that we bottom out at $40,000, the next price target, in my opinion, is around 80 grand at least before we pull back again, right? But with that being said, guys, like I said, we're still so early. It's only February. I don't expect this bull run to end until at least December. So we're very early in the bull market. We got to enjoy ourselves here. I mean, we're sitting at $45,000. We closed last month at $33,000. The RSI is finally going back to neutral territory, finally pulling back to a healthy level for the first time since October 2020. And that's going to give us a lot of room, a lot of fuel, a lot of accumulation down here in order for us to blast up for the next leg up. So yeah, guys, just stay positive. Just remember, we're very early in the game and there's nothing to fear. Just keep doing your research, keep buying the dips, and we'll be okay.